Gold has staged an impressive rally since the Fed's latest round of rate hikes. So what can we expect next from the metal? Joining us in studio now is Frank Holmes, CEO of U.S. Global Investors. Frank, always good to see you. Welcome back to New York.
It's great to be with you.
So gold looking good here. As we speak, we're trading around $12.45 an ounce. It's up 1.3% just this week. The question is, can this momentum hold now, Frank?
Well, the big thing, as I've said so often to you, what are happening with the interest rates? So the interest rates are starting to decline on the thoughts that what Yellen had to say. And what's really interesting to me is what's called the Trump bot. Wired Magazine and other publications wrote about this. It is an algorithm that looks for words, for verbs and adjectives and pronouns that Trump says, positive or negative, and immediately goes short or long.
Okay, so we have the Trump bump and we have the Trump bot.
It's a bot.
Right.
And what you have is also for the world of gold. How could anyone listen and digest what Yellen had to say, and within seconds, gold surges $20? So they've done data mining and looked at every one of her words and every speech she's ever given, and they've done a pattern analysis that if she uses these verbs and adjectives, that gold will go up or down because interest rates will go in the same direction. So that's what's really important to recognize, this inverse relationship to interest rates for gold and how fast they move. Now, it's very short. It can last for a day to a week at most. But then what's really important for all your investors more longer term is real interest rates. So what will CPI come out with for next month, deducted from what they're paying you to buy a 5-year or 10-year government bond. And if it's negative, gold goes up. And if it turns positive, gold goes down. And interesting enough, just before this recent surge in the price of gold, going into the Fed minutes, the presentation by Yellen, you saw the price of gold falling. You know why? Because the 10-year government bond was now giving you a positive rate of return. And now it's gone negative.
Now we also have options expirations next week could be a game changer for the price of gold. And short term today, the big news, healthcare bill. Could this impact the metal here, Frank?
Well, I think the whole thesis is gridlock in Washington. It doesn't matter who's in power. Can Trump actually get some policies pushed through? If he can get healthcare reform pushed through, then he has a higher probability of getting infrastructure spending pushed through. And so if he meets this as a stumbling block, then I think that you could have the market sell off and you could actually see interest rates actually decline, which could be positive for gold. But for the gold stocks, they need to have gold running and the stock market strong. They have an exponential greater beta move, they call it.
Now, Frank, besides gold, I just came back from 2 back-to-back conferences. A lot of people talking about cobalt, zinc, uranium. What do you make of these other commodities? Anything you're liking right now?
Well, yeah, they're all important, and when you take a look at the supply side, that the whole thing that's driving the cobalt is that most of it comes from a despot in the Congo, and can they actually get that production up and out to the capital markets? And when you look at zinc, there's been a decline in mining for zinc, and so there's a supply restriction because we do have global PMI still strong. And whenever global PMI is strong, it's positive for energy, it's positive for copper, it's positive for zinc, and it's turned positive last summer. So even with all the negative news, it remains strong. I'll give you something else that's great and contrarian. There's so much negativity towards emerging markets where you have a lot of gold mining taking place. Well, did you know that the emerging markets Chindia ETF has outperformed the S&P all of last year and year to date? So all the negative news towards emerging markets, in fact, they're performing better. So you have to remove and dig down and say, what is really going underneath the hood?
Okay.
And so I think the supply side is the important part to look at.
Okay, so you're obviously still very bullish gold, but what do you think would be the biggest obstacle in metal's way right now?
Would be rising interest rates. Clearly rising interest rates is above the CPI number will be the biggest drag for the price of gold. Now, what I think is going to be bullish coming up next month is the debt ceiling battle. And this debt ceiling battle can see the price of gold surge. Yep.
And Frank, before I let you go, you're in New York. You were just given an award, a Lipper Award. Congrats.
Well, thank you. Well, the Lipper Award is a Thomson Reuters Lipper Funds Award, and we received awards for best gold fund for 1 and 3 years. In particular, the 3-year number, it has a very low volatility relative to the other gold funds or gold ETFs.
All right, congrats on that, Frank. Thanks for stopping by, and thanks for watching our coverage. We'll have more for you on Kitco's Gold Report. Stay tuned.